When tradition meets innovation, bringing new forms of fundraising into the limelight. What does capital formation look like in today's markets? And how can regulation help to protect everyday investors? Moderated by Ruth Galia, WH Partners. Andreas Glarner, MME. David McLeish, Wiggin. Susan Breen, Mishcon de Reya. Motti Gill, Aspire Global.
Good morning and welcome to fundraising panel. I apologize that my partner, Ruth Galia, was unable to make it today, so I'm helping out here. Fundraising, the importance of availability and the ability to get capital for a company can be hardly overestimated. It's very important on any stage of the company development, whether it is a startup trying to grow up or a scale up. No matter what it is, the growth, the acquisitions, the capital is super important. And there have been quite a few traditional ways of raising capital in any industry, and including the gaming industry. Debt finance, from taking a bank loan to listing a bond, or equity finance, from private placing to IPO. And zooming onto IPOs, it seems to me that over the last few years in the gaming industry, it has been quite an attractive proposition to many companies. We have seen quite a flurry of IPOs few years back. But recently, this year, to me, it seems the situation is changing quite a bit. Susan, what is your view? Do you think the market is changing? What is the current state of affairs? Do you think the appetite of the investors is changing towards the industry?
Well, I think it's two things, Olga. I think there's a pause in the market. The most forceful reason, I think, this year in the last 12 months has been economic and political uncertainty. So if you look at the UK, Brexit has had a huge impact. So there's been a complete stall in IPOs and fundraisings. The view is that H1 next year we'll see the market come back. But that's only if the political uncertainty clarifies. I think Europe is a different creature altogether. That's where, on top of a traditional IPO fundraising structure, the gaming industry will, as we will hear later, be very much subject to the regulatory uncertainty and the financial issues that arise from that regulatory uncertainty. And in the US, this is the home of capital raising. There, I think the market is mature at one level, and you also have the US SEC saying, hang on, we're losing out to the debt, the traditional finance markets, new forms of financing, tech financing. We've got to do something in relation to our regulatory structure. And so there has been a pause and maybe a recalibration of the markets. It's also the case that when you add gaming on top of a traditional financial market raise, you have the added political, customer, trust and reputation issues. And that will make it a hell of a lot more difficult for a gaming company to put itself out there in terms of the disclosure.
David, maybe you can zoom a little bit more into regulatory aspect and how it affects the markets, the capital markets, the investors' appetite, in particular of institutional investments, how they view the gaming industry.
Sure, I think the position in the last 12 months has been quite interesting in both the Nordic exchanges, where there's been a recalibration of what investors are looking at, and some investors have actually pulled away from gaming stocks. Whether that was because they felt overexposed to them. There's been a lot of change in terms of sustainability and kind of, I guess you call it responsible investing. And I think the reputation of the gambling industries unfortunately had an impact there. In the UK, I think there's too many surprises with gambling at the moment, and that's created a lot of movements in stocks in the London market. Only a few weeks ago, a parliamentary committee with a self-appointed parliamentary committee with absolutely no basis for anyone to believe what they say would form the basis of future legislation, indicated that they very much support state restrictions online, and the share prices of most of the UK-listed companies tanked about 10% within half an hour of that report being released. So political and media sentiment is just creating too many surprises for institutional investors, certainly in the UK market, and with also that recalibration in Sweden. You're having to look maybe to the US, where currently gambling's enjoying a renaissance and good story about growing jobs and growing economy, and through the less mature phase that we've come through, where we're now suffering from maybe the excesses of the past.
So your prediction is that US will follow similar path, and probably in a few years' time, we will have a coldish winter.
But I think probably quite a few years' time. I think there's a long way to run in terms of the excitement and the bubble around the US, at least another 5 years.
Yeah, and I think, sorry, just to come in on that point, you're right, because the US is a different beast. If you look at the big casinos and the listed entities, you're talking there about the traditional casino model. They're highly leveraged. They're looking at reducing their leverage right now. Some of them MGM, Boyd, they want fortress balance sheets. They're doing that for two reasons. They're obviously collaborating and venturing with online gaming companies to open up the whole of the States and beyond, but also because they are aware that this is a very uncertain and unpredictable market.
Interesting. Balance sheet. Motti, you're the expert of balance sheets here, and you've been involved very deeply and actively in Aspire Global's IPO and subsequent bond raising. What has been your experience working with capital markets in Sweden in particular, because in Stockholm that's where your listing is? And do you think it's becoming easier or more difficult to raise finance in traditional ways?
Yes, so we listed the company approximately 2.5 years ago in Sweden. We started the process at the beginning of 2017. Where the market was flourishing. And I must say that from a NASDAQ perspective, we had a very cooperative shoulder to lean on, because we were a foreign company that wanted to attract some foreign companies to the Swedish market. And at the time, there were a few IPOs of gaming companies, so the market looked very good for gaming companies. At the same time, we looked also at the UK. However, due to the uncertainty at the time, which continues to date, we chose to go with a Swedish listing. So the process itself went perfectly good. We managed to do it in a shorter period than expected by the bankers, with some assistance that we received along the process. Since then, as a public company, when you're turning from private to a public company, at least Aspire Global, that was not financed by venture capital, it was quite a move because it was private company, things were closed within small group of people, and now to become transparent company with some proper corporate governance in place. So it was a very interesting process. I must say that we adjusted to it very quickly, joined some two Swedish board members in order to provide us some Swedish guidance on how board should work there. So the process for us went good. One of the reasons for us to go public, because Aspire Global is a profitable company, was to provide some additional exposure to the company, and we can definitely see it, because people can see the performance and the way that we are growing, so it added some business flavor for us. So the process itself went perfectly well. Same with the bond. But I think that in the last year, there are some changes and challenges in the Swedish market, I assume in other European markets as well, especially with sustainability kicking in. As mentioned earlier, institutional investors are either getting out of the gaming industry or sitting on the fence and not doing some additional transactions. So it is quite challenging today to have fundraising within Europe. And I think that if I would have gone through the process at the moment, I would have looked out of Europe, as mentioned, perhaps the US, perhaps Australia, that I understand that there is also some good market for gaming companies at the moment. But Certainly, we will need to go through this wave, and I believe it will take 1-2 years until it will go back to the previous situation, when the investors will understand that gaming companies, they are doing their work, they're becoming more responsible towards the players. So I believe in the future, but there will be some hiccups in the short-term period.
It's interesting that your choice of listing was in Sweden. And obviously, the choice of listing would very much be influenced to which investors you want to appeal, where the company is more known and where it has more exposure. What about other markets, like Switzerland? Is there exposure there?
Well, I think I keep the answer rather short. Switzerland definitely is not one of the vibrant markets when it comes to stock listing of gambling companies. First of all, I think from a traditional point of view, there only have been a few casinos in Switzerland, all terrestrial. Now, we open up regulations this year, so there has been some activity, but certainly not in the IPO market, more on a private share purchase agreement. So most casinos are privately held, and some parts of it also in public hands. So it's not a vibrant market. However, and I think we're going to discuss that in the second part of today's panel, there has been some movement in the new forms of investment. So we have seen more signals of foreign companies trying to see whether Switzerland could be a good fit for alternative investment scheme based on digital assets. So.
Right, that's also interesting because here I would think that the market is very exposed to the gaming industry in Malta, but we haven't really seen much uptake of capital markets for this industry. There have been a bond issued this summer, but that's pretty much it. Yeah. Interesting to note. So what we're hearing is that, of course, getting finance on the stock exchanges is a great thing to do, but there are some challenges that comes with it. So if it's not possible, or it's difficult, or too costly, or too uncertain, or many other reasons, and it's difficult to do it because of those, what are the alternatives? I'm going back to Andreas, because he is based in Switzerland, and he knows everything, blockchain-based, ICO, STOs, and everything in between. So how this particular alternative ways of raising finance has been developing in Switzerland in general, and in particular for the gaming industry?
Well, let me kick off with the general part. I think it's quite funny. This morning when I gave some thought what we should discuss today, I realized the first time I talked about alternative financing through blockchain technology at SiGMA was in, I believe it was 2015 already. So before the whole ICO hype happened, everything was still very early stage. Nobody really knew where the path would lead us. I think in the meantime, we all got a bit smarter. We saw some companies did well funding themselves with a launch of issues of some type of utility token, payment token, funny token, whatever you want to call it. But those times are over. I think we have to realize that, which, however, does not mean that the concept from a technology perspective is at its end. I think on the contrary, what we see nowadays in Switzerland, while there's still some utility payment token models which can be issued well and financed well, they mostly don't relate to gambling activities, more to protocol development activities, so fully unrelated field. But most industries, and that includes the gaming industry, they move to a token model which is a security token model. So it's actually something very similar we have seen and discussed just before, but based on a different technical infrastructure that allows easier access for investors, allows easier trading and low-cost trading, but it also requires a clear regulatory regime. And I think many jurisdictions, including Malta, with the new regulations in place, have that. Switzerland has had that for a couple of years now, and which allowed us to start building an ecosystem which you actually need to do these types of financing. What do you need? You need, next to stable regulations, you need a banking infrastructure which can implement and adopt to digital assets. At the end of the day, it's all about digitalizing securities. in a new form. You need banks who provide custody services for these assets. And you need a trading infrastructure which works in a fully regulated environment and which is easy accessible, not only for professional investors, but also for retail investors. And I think this ecosystem has or is being built up in some jurisdictions. Switzerland, I would say, is a bit advanced on that. We just had 2 licenses granted by the financial authorities for new blockchain-based banks. When I say blockchain-based banks, I mean those are traditional banks with traditional business models, but they have a technical setup which allows them to fully integrate digital assets into their core banking system. So they can provide custody solutions, they can provide account solutions for digital assets. So we already have that in place. We have the Swiss Stock Exchange, who filed a license application for a new stock exchange license and build on blockchain technology. There the goal is to tokenize all existing asset classes which are currently being traded on the traditional stock exchange, and also allow the trading of the new asset types which are going to be launched in the future. And we just last week, actually, because you asked, is there some example? There was the first test release. There were like 3 banks involved, where and the Swiss National Bank, which released a stable token for the purchase of a share in form of a digital asset. And we strongly believe that this is the way forward, that we're going to have the same old forms of financing, but in a new technical way, which is easier accessible.
So all things in new clothes. But have there been any gaming companies that actually use this regime, or not yet?
We are working on one project which is quite far advanced, but I think it's going to be happening. And I think some gaming companies see the opportunity to reach a wider investor audience and by tokenizing or digitalizing their shares.
Right. David, if a UK-based company and a UK-licensed gaming company would like to go for this alternative ways of raising finance, do you think they will succeed? Do you think they will be approved? Do you think the gaming regulator will be happy, unhappy? What problems do you see in this kind of route?
So certain gambling companies have they've either already undertaken ICOs and then sought to apply for a gambling commission license in the UK. And largely because of the way that the ICO, the breed of ICO, which we're now seeing less and less, had been undertaken, meant that they couldn't get the commission comfortable in relation to the provenance of funds. It hadn't been undertaken in a certain manner from an AML and other perspectives. And I think fundamentally in the regulated markets, the gambling regulators have other priorities currently beyond seeing how we could try and do alternative forms of fundraising. They're primarily focused on raising standards, protecting players, and they're really not devoting their energy to try and be collaborative and cooperative. We represented a couple of clients who were pursuing this strategy, and they really didn't get very much engagement at all with the Gambling Commission. So I think these structures can work. I think the security token is a completely different system, will be fully regulated. But again, I think in all these cases, when people are going to look to do this, they're going to have to educate the gambling regulators on the way. Don't do it and then go and apply for a license. Make sure you have your ducks in a row first, because the gambling regulators can be behind the curve. Malta is really engaging in this, but in some of the regulated markets, you don't get that same level of engagement.
Interesting. Motti, a bit of a direct question. If Aspire Global needs finance next time, will you go for this alternative means of raising capital? If yes, why? If no, why?
So first of all, as the finance person for Aspire Global, I look all the time for all alternatives in order to make sure that I will have the right path when I will need it, or when it is the right time to raise money. So yes, I would look into some new methods of fundraising. However, as David mentioned, Aspire Global is a company that is working under various regulated markets and various regulators. So I assume that in the short term, there will be some challenges with having, let's say, tokenization fundraising for Aspire Global. But certainly this is something that we are learning and checking in order to be able to move fast when the time is right. And on the other end, we're still looking on the regular or the conservative or the traditional fundraising, either through banks, bonds, and fundraising, always to understand exactly where do we stand. And you mentioned earlier that it is quite strange that here in Malta, not a lot of gaming companies are being floated or raising money in bonds. There was, as you mentioned, one in August, I think it was. We also discussed and checked what are the possibilities for us to do something here in Malta, but the market is not yet mature here. It needs to be educated, and also the volumes are lower than we can find outside of Malta, so perhaps we need to do something in collaboration with some other jurisdiction. But I will look everywhere, and once the time is right, I will do the move, either traditional or tokenization or new methods of fundraising.
Right. So it seems that even though traditional methods are available, there are some problems and challenges with them. And even though the alternative ones are also seems to be available or soon become available, maybe they are not ready or there is still uncertainty about it. So what do I do if I need to raise finance? What is my route? Is there any alternative to the alternative? Susan, what do you think?
Well, I don't know whether there's an alternative to the alternative, but I think it is about seeing whether the alternatives can be better tried and tested. And I would imagine Motti's view is pretty much emblematic of other companies. And if the IPO market won't go away because it is founded on investor confidence, disclosure, due diligence. The traditional bank markets won't go away. But what you have, I think, are challengers to both of those models. And in those challengers, you've got hybrids. So a couple of examples, and really if you look to the US again, which is one of the most sophisticated capital markets, they themselves, the US SEC, has been worried for a number of years now about the threat from innovative financing models and the impact that will have on the IPO market. And over the last couple of years, the SEC has been talking with Silicon Valley. They have been relaxing somewhat their IPO models so that you don't have to have a registration statement. So you're looking at platform market lending, you're looking at blockchain, you're looking at what's called Regulation A+. And interestingly, in July of this year, I think the first Reg A+ New York-based offering took place. And this could be fairly groundbreaking in terms of how the markets will react to less regulation, but still fairly stringent, and trying to get the balance between disclosure and at the same time fraud and the nature of the market. In terms of alternatives, I think they also reflect the different jurisdictions' appetites and comfort levels. So in the UK, you have corporate bonds as simple as a Hotel Chocolat corporate bond, which is raising money to support a specific advertising campaign around its product. That's not necessarily going to work in all markets. Direct listings in the States won't work in the UK, but they have been very successful in relation to how you release equity onto the markets, and I think Slack and Spotify have used that model. World Chess is a company that's just recently announced that it will raise 28 million, I think by reference to a hybrid IPO. So again, I think this shows the companies and the market's search for something that gives comfort, but it gives innovation and flexibility. And that hybrid IPO is that you will do an STO offering for about 4 to 6 million, and then next year you will go on to the AIM junior market of the UK. So
it's an
that
IPO in several stages.
It is the initial STO tokens. Yeah. So you have that to raise some additional capital, and that will then prep you for what is a much more traditional IPO. That is not necessarily cheaper or shorter to do. They say it has been probably just as costly and just as lengthy. But what you're seeing here are companies pushing the boundaries to find new ways of raising money in an innovative thing. But not to forget, as Motti says, the traditional lenders, the PE houses, the mutual funds from North America, the banks, they are all putting up a fight, and they're saying, why IPO? Why give away your equity when debt is cheap right now? Use debt, and you have a startup, Capital and Clearbank, who have said, look, we've got the 20-minute term sheet. Our aim during the course of 2019 was to lend $1 billion to a number of startup companies in a much more innovative and a much more flexible way. So I would imagine going forward, companies will have an eye to what they can do to be more innovative, but they will rely in the short term, and because of the fears of ICOs and the unproven nature of STOs, to traditional methods.
Thank you, Susan. That's a great outlook for 2020. Andreas, David, and Motti, what is your 20-second outlook for capital markets, for gaming industry for next year?
Well, I fully agree with Susan. I think IPOs won't disappear. They have a new coat on. They will look differently and will be very similar to what we refer to as STOs in the future. I think this is going to be happening.
David?
I think private equity, particularly North American private equity, will be trying to seize the opportunity of the ongoing US regulation. And so I think you'll continue to see more and more private companies, whether it's Bridgepoint taking Cherry private or Clairvest buying FSB, transactions involving private equity. I think the industry is much more mature than it was. I think private equity gets it, and I think they're in a much better place to be able to make an assessment of the risks they're willing to take than they were a few years ago. So I think that's where it's at.
And Motti?
I believe that for 2020 we will still see the traditional fundraising within the gaming companies. However, they will put their eyes into the tokenization and so forth. So still traditional will be the main source of fundraising for 2020.
Thank you very much for a very interesting discussion. Thank you.